Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
My name is Andrew Fake. I am from Mines and Money, and I'd like to welcome you to our third pitch battle of the week, which is a precursor to Mines and Money online taking place next week from the 23rd to the 25th of March. Without further ado, I'd like to hand you over to our host for today, who is Jochen Staiger from Commodity TV. A warm welcome to you, Jochen.
Thank you very much, Andrew, and also a warm welcome from my side. My name is Jochen Staiger. I'm the founder and chief editor of Commodity TV and Rohstoff TV, and also the CEO and founder of Swiss Resource Capital, just that you know who is talking. Yeah, I love to do this and to moderate this of course. It is like a Shark's Tank or Dragon's Den, or as we say in German, die Höhle des Löwen, but we will be much more polite, and we have today 4 fantastic contestants. First of all, we have Wallster from Southern Empire Resources. Then we have Scott Hicks from Luminex Resources. And we move on with Fernando Ganoza from Atico Mining Corporation. And last but not least, finally, thank God, a lovely lady, Shirley Anthony from Maple Gold Mines. Welcome also to you. And also let me introduce to you today our judges, which is Karr McCurdy from Rock Elm Capital. Then we have Fred White from Medea Capital Partners, my good friend from Lausanne, Claude Bejet from the Junior Mining Newsletter. Hey, Claude. Luc Tenard from Karumba Research, and also Vincenzo Zinni from Stelvio Capital. Very warm welcome also to your judges. And this is really important also because our judges finally will decide where $1 million, unfortunately virtual, will go to the winner of this pitch battle. And we will also have, after Shirley's presentation from Maple Gold, we will do a polling with all of you and want to see first what the audience thinks, who's going to win. And then we ask our judges who they think should get the million. And then we have finally a winner of this pitch battle. So Dale, if you are ready, Dale Wallster, I think you have some slides. Please bring up the slides. We need the slides from Southern Empire, please. And we have 3 minutes. Has each contestant to 3 minutes to present. Afterwards, we have 8 minutes Q&A. And I have my beautiful watch here, and I have also my lovely buzzer that everybody knows what's going on. And then I would say, Dale, the floor is yours.
So the question is, why should you invest $1 million in our company, Southern Empire Resources Corp? I will be making forward-looking statements. So we go to the third slide, please. We have 2 key assets: the Oro Cruz project that covers the Oro Cruz, American Girl, Padre Madre deposit areas that last produced in the mid-1990s as gold prices were declining. And we also have our equity position in Augusta Gold Corp. Next slide, please. Starting with a historical resource on our property of 340,000 ounces, together with what exists in the existing heap leach pads and waste dumps, and given the tremendous potential of the Caborca orogenic gold belt, we believe that we are well on our way to finding more than 1 million ounces at our Oro Cruz project. Next slide, please. Our historical resource of 340,000 ounces grades 2.2 grams per ton of oxide mineralized materials. We plan to aggressively explore to expand this. Next slide. We have a great geology in the Caborca orogenic gold belt, where Fresnillo's Herradura mine, the granddaddy of mines in this belt, produced 425,000 ounces last year. Ross Beatty's Equinox Gold Mesquite mine, 14 miles away from us, produced 141,000 ounces from old waste dumps. A lot of that, next slide. Reprocessing of historical leach pads might be the low-hanging fruit that is a low-cost path to gold production for us. We have excellent infrastructure, a great team, aggressive exploration programs planned for that great target geology. Next slide. But so do all of these companies. So why invest in Southern Empire? In reality, it's apples versus oranges. They're all excellent in their own way. One should probably split their $1 million into 4 companies. I believe what sets us apart can be shown in the next several charts though. Next slide, please. Above is a pie chart that shows that our directors, management, associates, friends, and lovers hold about 56% of our 51 million issued and outstanding shares. Next slide, please. We believe that our holdings in Richard Wark's Augusta Gold will continue to appreciate and provide us with a source of non-dilutive financing as we move forward. Next slide, please. And this chart shows the road we've been down. We're not even a year old. We've taken some incredible lumps through 2020 and have traded about 95% of our float. We've done some serious base building. Next slide, please. California is frowned upon by many because of permitting. The brownfields nature of our project gives us the confidence that we'll be able to get through, get all our permits that we need. Next slide. And after we introduce our company to a new American shareholder base, when we drill some confirmatory holes with results like we've got from the historical drill holes, this should be the result. That's my story in 3 minutes or less. Glad you watched. Thank you. Next slide. Sorry.
Hey, perfect. That was really on the spot. Thank you very much. And now please get the screen clear. Thank you. So 8 minutes for our investors. Who has the first question? Yes, Vincenzo, please.
Yeah, hi. Thank you. Very nice presentation. Quick one. What is the average cost of production, and is there any funding requirements in the near term, and is any financing from banks or other investors at the moment apart from equity?
Yeah. In terms of moving forward, we're an exploration company, and we're looking for. And moving forward with our exploration programs. We're well financed. We have about, in February 19th, we had about $9.9 million in working capital, or 19.5 cents a share in working capital. And that's ample to move us forward in our exploration efforts. That working capital was composed of $3 million in cash and the balance in our equity holdings in Augusta. We've got a lot of work to do before we plan on moving forward with development and production. And yeah.
Mm-hmm. So you have a pre-feasibility study level at the moment.
Oh, yeah.
So you haven't done, yeah.
We're an exploration company.
Okay. Very good.
Good. Then Claude Bejet, please.
Yeah, so basically your market cap is covered by your working capital. That's a pretty good start because you get everything for free. My question is, on the heap leach pad, how many dollars do you have there in the ground in your view?
That's a good question. We did some recent sonic drilling of those leach pads, and surprise, we showed that there's actually gold in them there pads. No surprise at all. The next, we know there's somewhere between 6 and 8 million tons. And we know that we recently released some sonic drill results for those leach pads, and some of that material graded as much as 1 gram per ton. You know, we're going to get out there shortly. We're hoping to remobilize the sonic rigs towards the end of April, do some more drilling in a phase 2, and follow that with metallurgical test work. After that, we'll be able to calculate a resource, and that will help define how much money we can hopefully extract in a relatively low cost.
Do you think you have $100 million somewhere buried in there?
I would like to think so.
Okay, great.
Okay, so but then Luc ten Haaf, please.
Yeah, even though it's good news to have working capital like this, no warrants, but how come that you went from 120 to 20 cents? Did something happen there?
We're a relatively new company. We started trading just about a year ago, March 24th. Our shares came free trading. We went public by way of a capital pool company, a qualifying transaction with a capital pool company on the TSX Venture Exchange. There were only 2 some odd million shares that were free tradable when we went public. and we rocketed up to about $1.45 a share. And then we had some unfortunate, terrible drill results from another property that we have in Nevada. Those came out at about the same time as the 4-month hold on the qualifying transaction private placement came off, and the private placement was done at 30 cents, and a lot of people saw the Nevada results and said, I'm out of here. And that started our downward slide. We had another 4-month hold come off, and the slide continued. We got into tax loss selling, but in the last year, we've traded about 95% of all of the tradable shares that are currently issued and outstanding. So we feel that we've got a tremendous base built at the current price, and moving forward, I'm hoping the only way we can go is up.
Are insiders buying?
Yes, yes. As recently as just the other day, Ron Nedolitsky was filed some insider buying on SETI.
Thank you. Fred White, please.
Thanks for your presentation, Dale. Really interesting. Can you tell us a bit more about how you hope to achieve finding 1 million ounces there? Have you already got all your prospective targets, and what depths are they and so on? Is it all going to be open pittable?
Yeah, actually, a very good question. We're looking at an overall area of in excess of 5,000 acres. We have currently in front, we're in the processing, permit processing stage to establish 65 drill pads over 7 separate target areas of in an area that's 630 acres of that overall land package. We have low, this is an area that has been mined in the past. It's actually probably the first gold ever mined in the state of California when the Spanish moved into California with their missionaries and such. But it last produced in 1996, and the production then was from both open pit and underground. There's a low-grade component that was mined by open pit, and there's high-grade component that was mined by underground. And because of California, we will concentrate a lot of our exploration on the underground because the permitting is easier. And that's where we're chasing the high grade.
Thank you. So Karr McCurdy, please. You have to unmute Karr first. Sorry, we cannot hear you. You have to unmute yourself. Yeah.
Yeah, Jochen. Dale, could you tell me a little bit about your plans for non-dilutive financing?
Well, we hold 1.625 million shares and a bunch of warrants in a Richard Works Augusta Gold. It used to be called Bullfrog Gold. That company has restructured, reorganized under new management, and we went from being a large shareholder in Bullfrog to a much smaller but better off shareholder in Augusta, and that we have we really believe in that company and that management. That might be one of the next gold mines, if not the next gold mine in the state of Nevada. And we think that our shares holdings in that company will appreciate significantly. Because it's not a core position, we'll be able to sell that along the way. And there's the dilutive financing.
Thanks, Dale. Just and lastly, what's on either of these sites with the historic workings in the way of any infrastructure, any
Well, one of the key things is about 3 kilometers of existing underground development that was put in by Hecla and the American Girl Mining joint venture, Hecla and MK Gold in the early 90s.
I'm very sorry, but the 8 minutes are over. Thank you very much, Dale, for great presentation, and thanks for the questions to our judges. So we move on with Scott Hicks from Luminex Resources, please. And I think you have also a slide, please. Can the slide be turned up? Thank you. All right, Scott, the floor is yours.
Great, thanks very much. Thanks everyone for joining me today. Today I'm going to talk about Luminex Resources, which is a Lumina Group company. The Lumina Group was founded by Ross Beatty, so he's a 20% shareholder in Luminex Resources. Management also holds about 7% in the company, so similar to Dale's point, fairly high holdings from the group here. So we have 4 key assets, all of which are in Ecuador. 2 of which we're working on ourselves and 2 of which are being worked on by partners. So we're working on our Condor Gold project, which has an existing 5.2 million ounce resource right now. And we're driving that towards a PEA that we expect to have done in June. That'll be on about half of that resource, which is what we're calling the northern epithermal area. So a gold silver area in the north of the project. So we expect to have that done in June at Condor. At Cascas, we just started drilling a copper porphyry target last week. So we're very excited about that. This is in the same belt as the Mirador mine, which is just put into production, the Warintza deposit, which Solaris has, and the Porvenir deposit, which SolGold is drilling. So it's a very exciting belt filled with copper porphyries in Ecuador. So we just started drilling the Cascas project there. And then if you go over to our partnerships, we've got BHP working on Tarqui, and actually they started drilling the Tarqui project basically the same day that we started drilling at Cascas. So they're also targeting a copper porphyry in that same belt, and they're looking to spend $42 million over 6 years to earn 60% in the Tarqui project. They can go to 70% if they spend an extra $40 million. And as I said, they're currently drilling. So, hopefully we'll have results from both Cascas and Tarqui in Q2 this year. And then we've got our partnership with Anglo American, and this is on our largest land package. This is a massive land package in the center of Ecuador. It's about 67,000 hectares. They're spending $57 million over 7 years to earn 60%. And they can go to 70% if they carry us to a construction decision on any project that could get defined there. They're not mobilized right now because of COVID, but we expect them to be back in the field late this year and hopefully be drilling in 2021. So in a $75 million Canadian market cap company, you have a base resource of 5 million ounces of gold, and you have 3 copper projects which are getting drilled in 2021 that we're very excited about, and $100 million of commitments from BHP and Anglo American to work on those. So with that, I'll open it up for questions. Thanks very much.
Wow, perfect. Thank you. That was even 10 seconds less faster. I love it. Yeah, please, questions from our judges. Claude, you were the first to raise the hand.
Yeah, so the valuation doesn't make sense for a Ross Beatty company. You're trading at something like $15 an ounce in the ground. So that's probably due to a political risk perception, although in Ecuador, you have Lundin Gold producing 200,000 ounces, so it's not that bad. Don't you think that your 10% of your company, I think, is owned by the Ecuador Armed Forces? Don't you think that is a very good reason to re-rate your stock? Because you should have less political risk, really.
Yeah, sure. So, I mean, at our Condor property, Claude's right, the Ecuadorian Military Pension Fund holds 10% of just our Condor property. And, they're not that actively involved, but obviously it's a legacy from being along the Peruvian border there. We're now entering our third, president since we started working in the country. And obviously the recent election added a lot of volatility to all the Ecuador stocks, but we're going into the second round of the elections now, and we feel that both candidates going forward are going to be pro-mining. It's a huge part of having the country, their economy move forward in general as they pivot away from oil. So we think there will be a re-rating now that you've got these 2 large mines operating in country at Mirador and Fruta del Norte. Thank
you. Then Fred White. Fred?
Yeah, thanks, Scott, for your presentation. Yeah, similar to Claude's question, really, even if it was just Condor, really undervalued on just a per ounce basis. So what's going to drive the next step change in valuation for Luminex that's within your power and not perceived country risk?
Yeah, for sure. So, I mean, the 5 million ounces, I think it's spread across five deposits, and a lot of investors have trouble, visualizing how that's going to come together into a coherent mine plan. So a big part of the PEA work we're doing right now is to demonstrate that these 4 deposits in the north that make up the 2.6 million ounces can come together and be a viable gold project in, the $1,400–1,500 gold range. So that when we have that out in June, I think that'll show that. And yeah, like you say, I mean, I think anyone buying the company right now is getting the copper upside potential for free, basically.
Great. Luc ten Haaf?
Yeah, I just lowered my hand because my question is a little bit similar, but I think I can still ask. Yeah, the 5 million ounces, often when a company refers to it as a sort of backstop evaluation, in most cases, I think there must be something wrong with it. Otherwise, why would you be so cheap, especially for a company in this group? So were there previous studies done on this 5 million ounce deposit, or is this will this be the first one?
So there was a study done on the southern portion of the deposit. So the other half that we're not including in the PEA, which is candidly lower grade. It's 0.5 gold, 0.1 copper in an open pit configuration. Since we started drilling the project, we added 1 million ounces basically of an underground target called the Camp deposit, which is 3 grams per ton a gold equivalent between gold and silver. So the plan with the PEA is to blend the high grade ore from the underground Camp deposit with the 3 open pits in the north. So you'll end up, the open pits are around 0.8 grams per ton gold equivalent between gold and silver. So, with the ore from the Camp deposit as well as the other 3, you'll end up with a stronger mine plan overall.
Okay, and if you, let's say the PEA shows you that this deserves further development, wouldn't it make sense to spin it off from the exploration assets, because then it becomes more of a development asset?
Yeah, so I mean, our group has a long history of doing spin-outs and realizing value that way. I think from our perspective, we want to make sure that the copper assets have legs on their own. So, and I think we're on the cusp of knowing that with BHP drilling now at Tarky and us drilling at Cascas. We think by the end of the year, we'll have a sense what the copper portfolio looks like, and then what the PEA at Condor looks like, and we might evaluate separating the assets at that point in time.
Thanks.
Vincenzo.
Yeah, I haven't seen the map, but can you tell me if there are any other major development next to the Condor mine, any other producers? Yeah. I haven't seen the mine, so maybe you can tell us also in terms of infrastructure, what do you need, and if there's anything in place already there?
Sure. So we're 30 kilometers south of Fruta del Norte, which Lundin just spent, about $800 million to build. The infrastructure in the area is pretty good. We'd have to run independent power in, but there's hydropower to the camp now, but you'd have to upgrade the line. The Lundin properties go right to the northern edge of our Condor concession, and they have a joint venture exploration agreement with Newcrest that's also working in and around our project. So it is a very active region. And then you've got the Mirador mine north of Lundin Gold as well. And then on the southern edge of our Condor property, the Newcrest Lundin JV picks up again. So we're kind of boxed in north-south with Newcrest and Lundin working away there.
Thank you.
Karr McCurdy, please.
Yeah, Scott, just tell me a little bit about what it's like on the ground there with the local situation, local communities.
Sure. So, we work predominantly with 2 separate communities, one at Condor and one at Cascas. Condor camp's been there for 30 odd years. So it's a well-established relationship with the community. Cascas, it's a bit newer. This area, there's a lot of indigenous people along the side of Ecuador. It is very, regionally specific. So it's, town by town, pocket by pocket. So, we've spent a lot of time getting community agreement access and doing stakeholder mapping in and around Cascas to get proper access there. There's also some artisanal miners, not on our deposits, but in the area there along that Peruvian border, just that have worked there for years. Some are allowed by the government, some aren't. Ecuador has been doing a good job lately of promoting responsible mining and trying to, clean that up and sort it out as they go along.
Thank you.
Who's next? Yeah. Oh, sorry. Look, I didn't see that. You have a yellow background.
Yeah. I think raising capital is not my concern here, obviously. What do you think yourself is your biggest risk as a company?
Yeah, I mean, on the Condor side, I think it's going to be demonstrating that it is a viable economic project, which we think we're well on the way to doing. On the copper side, it's obviously just having the drill success there. We used to have a partnership with First Quantum, working one property, for example, and the drilling didn't work out. So I mean, obviously, we need to be successful on the drill bit, but I think between BHP and ourselves at Cascas, we're hopeful that one or both of those will work out well this year.
All right.
Thank you very much. That was perfect on the spot. Thanks for the presentation and thanks for the questions. And we will move on now with Fernando Ganoza from Atico Mining. Fernando, do you have any slides or you want to start right away?
I will start right away. Thank you very much.
Super. Please then get started.
So Atico was formed with a clear mandate to become a mid-tier producer. It was founded by the Ganoza family, a mining family out of Peru, the same family that started Fortuna Silver Mines, which today is close to a $2 billion company. As a group, we are on our way to building our 5th mine in over just 10 years, with a very good track record in terms of delivering. Now, this management group, along with insiders, are still the largest shareholder of Atico. So we have a lot of skin in the game. Now, Atico has 2 high-grade, high-margin assets. The first one is El Roble mine in Colombia, a high-grade copper and gold VMS that has been in production for over 30 years, is producing right now, and is generating significant cash flow for Atico. To give you a sense, up to Q3 of last year, El Roble generated close to 9 million in free cash. Keep in mind that the average copper price at which we sold was $2.94. Compare that with today's over $4 per pound for the copper price. So that will give you a sense, an order of magnitude of the margins that we can get out of El Roble at today's current market metal prices. The other thing to know about El Roble is that it's a VMS surrounded by 6,600 hectares that we control. And we believe that there's a good chance we can prove the hypothesis of a VMS cluster within those 6,600 hectares that we're currently exploring. So that's one of the big prizes we're after at El Roble. We still have not only the production and the cash flow, but the exploration upside. In terms of our second project, La Plata, it's also a high-grade VMS. It's under development. We're working on a feasibility study, which we will have ready in 2022, alongside a construction decision. Its production profile is going to be very similar to El Roble in terms of production of copper pounds and gold ounces, which is about 20 million pounds of copper and about 11,000 ounces of gold. So together, those two will imply, we believe, a significant re-rating in terms of our potential to generate revenue and also beyond the exploration upside. So you have a management team that knows very well what you're doing. You have 2 great assets with potential for cash generation in the near term and also exploration upside. So with that, I'll open up for questions.
Super, thank you very much. So Luc, is that an old hand or is that a new hand?
It is an old hand, but I can still do a question.
Okay, that's sorry. Then Fred was before you.
Okay,
I'm sorry.
Okay.
I have to stick in the order. Fred White, please.
Oh, okay. Thanks. So yeah, thanks, Fernando. Really interesting presentation. So great that you have cash flow already that can underpin your exploration. But obviously, your valuation compared to your cash flow is quite low at the moment. So is there a reason for that? Are you drilling from reserves? Is there a lot of life of mine left on the existing pit you're drilling from?
Yeah, I think there are two reasons for that. And before that, I'll answer very quickly. Our current market cap can be almost all of it explained by the future cash flows that El Roble is going to generate. So basically, The evaluation for La Plata project, which is under development, is basically free, or we're getting very little value for it. And I think one of the reasons is that we're still, the market is waiting for us to prove the cluster hypothesis. And I think there is still a good chance that we can test it and prove it. We have 15 targets at El Roble site that we still need to drill test, where we believe there's opportunity to find the VMS. So we still have ample opportunity. And as you mentioned, it's all self-funded within the company.
Thank you. Then Luc ten Haaf.
Yeah, a question about ownership. Do you own both mines 100%, or is there any option deal behind it?
So thank you for the question, Luke. El Roble, we own 90% by design. And La Plata, we currently own 60%. We have an earning up to 75%. All we need to do to get to that 75% is complete the feasibility study and then fund the construction, which we're going to do anyways. So with that, we'll get to 75%.
Huh?
All right.
Yes, who's next? Yeah, Karr and McCurdy, please.
Fernando, what are the time limitations on the earn-in that you just mentioned for La Plata?
I'm sorry, Karr, I understood the ramifications.
Yeah, on the earn-in, what are the time constraints on that? What's the time horizon for that agreement?
Sure. So the only time constraint that we have is that by March of 2022, we need to have ready the feasibility study, and that's our plan. It's actually to have it ready before then. So that's the only constraint we have. Then there are no time constraints for construction and funding. Of course, we want to do it as fast as we can.
What's your budget for the remaining exploration and other data collection that goes into this feasibility study? Do you have sufficient?
So in the next, yes, we do. Good question. So in the next, let's say, 18 months, we're going to be spending about 10 million at La Plata. Now that includes significant exploration beyond further defining the resource and migrating some of the inferred resources into measured and indicated for the feasibility study. So, but beyond that, we are drilling other targets that we believe are interesting and have potential to show us additional mineralization. So that involves, the 10 million involves beyond the feasibility study, is what I want to convey. And all of that is going to be funded through El Roble. El Roble has the ability to generate sufficient cash to fund the development of La Plata.
Thank you.
Good. Who is next?
So, and then
Vincenzo, please.
On the Roble, you said that you have the extension of the cluster that you are trying to map. Is that are you doing the same thing at the same time as La Plata feasibility study, or are you stopping that until you finish the feasibility study in La Plata?
No, we're not. We're doing it concurrently. So we're drilling this year 30,000 meters, both La Plata and El Roble. That's about 50% on each of those 30,000 meters. So we're still chasing that VMS deposit that we believe could be there and form alongside El Roble the VMS concept, class VMS cluster that we are after. That's the big prize for us at El Roble. We still have opportunity to continue replacing mineralization at El Roble mine as we extract ore, of course, and some of the drilling goes there, but most of the drilling goes to finding another VMS deposit.
Next one. Yeah, Karr.
Yeah, just quickly, Fernando. So your product at both of these sites would be a concentrate, and how are you situated to get that to market?
So at El Roble, we're already doing it. We produce a very clean copper concentrate with directly to China on the Pacific side of Colombia. So we're going to be producing two concentrates, a copper and gold con and a zinc con. And we anticipate that there are at least 2 or 3 ports where we can actually ship that concentrate. So we don't foresee any problem right now with shipping out those cons.
Karr, you have to unmute, yeah.
There's no arsenic or antimony or...
No, Del Roble is a very clean concentrate. We very rarely get a penalty. At La Plata, we're expecting something very similar in terms of clean concentrate production.
Super, thank you.
Vincenzo?
So, where is the nearest processing plant for a Roble?
For El Roble, so we do have the processing plant, of course, directly on site. And we have about 800 kilometers away from us, another processing facility.
Okay, so but you don't need to expand your existing processing plant, I guess, if you expand the VMS.
So it's running at 1,000 tons per day, and we have the ability to expand it over 2,000 tons per day if warranted by finding other VMS deposits.
Oh, okay. So there is spare capacity.
Correct.
So one more question. We still have time a bit. Yeah, Luc, please.
What is the last time that you raised capital?
The last time that we raised, it was in 2013 when we actually acquired El Roble mine.
So since then you were funded by production?
Yes, yes. Everything we have done has been through self-generated cash flow so far.
Okay.
Okay, perfect. Thank you very much. That was Atico Mining. Thanks, Fernando. Thanks to the judges. And now we come to Shirley, Anthony, and Maple Gold Mine. Shirley, I think you have also slides, right?
I do.
Yeah, super. So when you are ready, you can start. The floor is yours.
Thank you very much for the introduction, Jochen. I'm very excited to be here to present our story in such an exciting format. And judges, it is a pleasure to meet you all. So Maple Gold Mines is an advanced Canadian gold exploration company, and these are our competitive advantages. First, our projects are in Quebec, Canada, a top-ranked mining jurisdiction. In particular, our projects are located in the Abitibi Greenstone Belt, one of the most prolific, stable, and supportive gold-producing regions in the world, and host to Canada's largest gold mines. Second, our largest strategic investor and 50-50 joint venture partner is Agnico Eagle. They are one of the most well-respected gold producers in the world and invested $6.2 million last year in Maple at 24 cents, and we're currently trading around there as well. Third, the company is backed by management and board with major company experience. Our CEO spent more than a decade at Ivanhoe Mines with Robert Friedland as Executive VP, building value in extremely challenging, low-ranked jurisdictions. So if this team can build value in places like Mongolia or in South Africa, they can build value in Quebec. 4, we have 2 projects with enormous upside potential sitting right next to each other. The first hosts a major gold resource with significant expansion potential, and the second hosted a past-producing high-grade gold camp operated by Agnico. 5th, we are a $90 million market cap company with nearly $20 million Canadian in cash. In addition, our partners is committed to funding a minimum of $18.25 million in exploration expenditures over the next 4 years. Finally, we have seen incredible growth in institutional shareholder support over the past 6 months with some very smart money coming into the story. Next slide, please. Okay, so, well, the next slide is, there it is, a snapshot of our 2 adjoining gold projects. The Douay project has an established mineral resource of roughly 2.8 million ounces at +1 grams per ton gold. The resource is spread over a footprint of 6 by 2 kilometers, which is bigger than the largest open pit gold mine in Canada. Resource expansion and new discovery potential are considered excellent across the property, and the joint venture is actively drilling with the goal of building a +5 million ounce gold resource. The second is the Joutel project, which hosted the Telbal mining camp that was in production from 1974 to 1993. The camp produced over 1 million ounces at 6.5 grams per ton gold when gold prices were between $80 to $360 per ounce. It's no secret that one of the best places to look for gold is an old mining camp that operated in a completely different gold price environment. The joint venture is currently digitizing drill data and building a 3D model of mineralization that was left behind. Exploration and drilling will follow within 12 months with the goal of proving up new compliant high-grade ounces both near surface and below the historical mine workings. So in summary, next slide, please. Maple Gold operates in one of the best mining jurisdictions on earth with one of the best producers and explorers in the industry as a partner. Agnico's involvement is can I have just
I'm very sorry for that, but I gave you 10 seconds extra. Okay,
oh, okay, I appreciate it.
Thank you very much. That was great. And now we are coming before our judges are working. Can you please clear the screen? That would be great. Thank you.
Can I have just
I'm very sorry for that, but I gave you 10 seconds extra. Okay,
oh, okay, I appreciate it.
Thank you very much. That was great. And now we are coming before our judges are working. Can you please clear the screen? That would be great. Thank you. I think we have now the polling of the audience who would win. That's also interesting.
No, we've got the Q&A first for Shirley.
Oh, excuse me. Oh, Jesus Christ. Yeah, of course. Okay. I'm sorry for that. That's great.
We kind of could go and let Shirley off with sort of like Q&A.
No, for sure. That's funny. That was the first time. So your 8 minutes Q&A, fantastic. I love it. Luc was the first I see here.
Yep. I think it's great to have Agnico as a partner, but there's also a risk to it, I think. Why did it lead to a 50-50 joint venture instead of a equity investment? Because I think you lose a bit of control, isn't it?
Well, in terms of our current management team's thinking, and they came in 2017, they always knew that this was a project that needed a bigger brother, just for the sheer size of the property. The property package itself is over 400 square kilometers. And it takes a lot of drilling to be able to prove something of this size up. And when it came to looking at strategic partners, Agnico was bar none the most ideal partner that we could wish for. And we thought that 50-50 was actually a really great setup, particularly because the joint venture has been set up where our VP of Exploration, French Bedell, is the general manager of the joint venture operation. So it's actually our team that's doing all of the work with a lot of support and review by the Agnico exploration team. And it's us doing the work. So we actually do have a lot of control. And the way that the joint venture is formed, there's two people from each side that have a voting ability. So no one side can sort of control the narrative, as it were. It has to be evenly agreed to by both sides.
So will you be free to announce drill results whenever you want, or?
Absolutely, absolutely. And Agnico, their team has been absolutely fantastic in terms of reviewing our information. So not an issue at all.
All right.
Next one. Fred, please.
Yeah, sure. So also some questions around the JV. Is the intention moving forward to stay at 50-50? Because as you mentioned, it'll be a big old drilling program. And second part to that, how many meters are you going to do in the next drilling season, and when are those results going to be out?
Great. So the intention, the joint venture was just formed. The binding term sheet was signed back in October of last year, and the final JV agreement was signed in February. So that was just a month ago. So currently we're just getting started. The joint venture is working really well. They have an incredible team. Our team and the Agnico team just get on so well. So at the moment, it is planned as a 50-50 partnership. And we're currently, our first sort of maiden program is already underway. It's planned as a 10 to 11,000 meter drill program. It's our winter program, which will be mainly focused on resource expansion. There's a little component of regional exploration work as well. And the drill results should be coming out sometime in the summer. So we were about halfway through that drill program already.
Vincenzo?
It's great to have $20 million cash on the balance sheet, but can you tell us the cost of the drilling cost and when you're going to run out of cash?
Well, in terms of all drilling, that is funded by Agnico. So the budget for this year is going to be around $4 million. That is what the the minimum committed expenditure for the joint venture. So Agnico is committed to spending $4 million this year, $4 million next year, and then $5 million in the last 2 years of this agreement. So at this point, we're budgeted for $4 million, and all of that comes out of Agnico's pocket. So we're, in terms of Maple and our cash position, we're sitting in a really good spot with very little burn.
Very good. Thank you.
Next one. Okay, the judges are still thinking, then maybe a question from my side. We saw that 4 years of $18.25 million for the exploration. Can you shrink that time frame? Because 4 years is a long time, and the precious metal bull market has started already. And I could imagine that you want to also speed up to be really then fully into, let's say, the bullish scenario here.
Absolutely, and that's a great question, Jochen. Absolutely, there is a lot of flexibility. Agnico is flexible. They are open to speeding that timeline up. It will depend on exploration success as well as market conditions, but I think there's definitely a potential for us to sort of shrink that 18 million to, instead of 4 years, maybe 2 years, and just really, you know, hit the gas pedal and go and try to explore this as quickly as possible to grow that resource. So I think there's definitely an opportunity for things to speed up.
Super, like to hear that. Then Luc ten Haaf, you raised the hand.
Yeah, you've got about 400 million shares outstanding, fully diluted.
Fully diluted.
Is there a plan to roll that back, or is there no plan for that?
Another great question. So there is no imminent plan to do any kind of rollback. We recognize that, you know, for North American investors, that might look a little bit higher. Certainly, it hasn't impeded any of our, you know, institutional shareholders, such as Fidelity, from coming in and buying, you know, 18.2 million shares at 38 cents on the open market. But at the moment, we don't have any plans to do any rollback. If we do look at something like that, it would have to be done in conjunction with a major deal of some sort, to where we can support the market after the fact. So at this point, you know, I think with our current valuation, with the cash that we have on hand and the joint venture funding coming in place and the kind of prospects that we have, there's definitely a lot of room for share price appreciation, even at the share capitalization.
Great.
And
Claude,
what would be the ideal, can I have one more?
Yeah, look. Yes.
What would be the ideal path forward? Let's say in an ideal world, like this year you want to do certain things. So like where do you want to be in 2 years? In a best case scenario?
In a best case scenario, we'd be drilling quite aggressively at both projects, both Douay and Joutel. Joutel we're very excited about, just because it is past producer, very high grade. They only mined the highest grade portion of that mine and left a lot of the high grade material near surface and under the mine completely untouched. So we want to go after that project within the next 12 months and start drilling there. In an ideal scenario, we would be going faster on the Douay as well to prove up more ounces. You know, I mentioned we have a goal of proving up plus 5 million ounces. Even at depth already, RPA, which did our resource estimate back in December of 2019, they talked about us there already being 500,000 to 1.5 million ounces of gold resource just within the current drill intervals, just below the pits. So I believe that if we just do a lot more drilling, actually, both in and around the resource area, there's just tons of expansion potential laterally as well as at depth. We should be able to get to a much larger resource. And that's really ultimately the goal for Agnico and Maple. You know, we have been asked questions about why not move it forward on the economic side, study side, why not get a PEA? And we're like, why do we want to spend money on that when we can spend the same money to try to double or triple the resource size and get a massive, massive resource going? Because again, in this area of the world, we have some of the largest open pit gold mines in the country, in the world. And that's sort of our plan, is to build the next major open pit gold mine in Canada.
Super. Claude Bejet, fast question.
Well, that you answered you answered my question. I was wondering what Agnico had in mind. So doubling or tripling the resource, and they probably have a production. So you're supposed to buy the dip. Your stock was 56. It's now 27. You think it's a 10-bagger?
We sure like to think so, Claude. Yeah, I mean, at this, just look at our property package. In addition to the resource that we have, and then this high-grade gold past producer, plus all these other targets that we have on the western portion of the project that we barely touched because there's a lot of potential for sure.
Thank you very much. Yeah, great, super. Thank you. But now I'm correct when I say we have the polling.
Correct.
Yeah, so please, to the audience, vote as you see now on the screen, and do your vote and then submit. Hit the submit button, because otherwise it's not working.
Okay. Should we keep the polling open for another sort of about 15 seconds, Jochen?
Yeah, sure. Just to make sure everybody had the chance to do that.
Up for us too. Who should we vote for?
Well, that's up to you, really.
You are allowed to vote for yourself, just as Justin Trudeau, I'm sure, votes for himself at the when it's the general election there in Canada. I think we'll just give it another 5 seconds.
Yep,
5.
That's right.
4, 3, 2, and 1. So the winner of the public vote is Maple Gold Mines. Congratulations to Shirley.
Wow, congratulations. Okie dokie.
Thanks,
back over to you, Jochen, for the best.
Okay, thank you very much. Great. Yeah, congratulations, Shirley, for that public polling. You made it. Now let's see what the judges are saying. And I would like to start with Karr McCurdy, to whom you want to give your million, please. And you have to unmute yourself because we cannot hear you.
Thanks, Jochen. I put my million with Fernando. I think Dave, Scott, and Shirley, thanks very much. You did a great job. I think you've got a good value proposition as well. Fernando, I like how you're self-funding your work, and I like the track record that you've got in building value. And I just see a good multiplier in your situation. So thanks very much.
Okay, super. Thank you. Then Fred White from Medea Capital Partners, to whom you want to give your virtual million.
Yeah, certainly. So first of all, thank you everyone for presenting. Really, really great. From what I can tell, all your companies are at least slightly undervalued, which is where we like to see them from the investing standpoint. But I'm going to go with Maple today. Couple of reasons. One, the gold exposure, which is positive, but tier 1 jurisdictions tend to fare better if there's any shocks, particularly on the exploration side, plus the size of the asset. It's just very interesting.
Super, thank you very much. Then Claude Bejet, to whom you want to give your million.
Well, that's a tough call because first of all, I want to congratulate the pre-selection of the companies. They're all outstanding. And I think at least 3 of them that I know quite well and I've recommended, I think 3 are 10 baggers. I would say Luminex, because the potential there is just huge. And it's as a bull market evolves, people are less risk adverse in terms of country risk. So you're going to have a re-rating from what they have, and you're having an added re-rating because people will be less concerned with the discount from Ecuador will recede. For Maple Gold, so they have a lot going for them. It's very clear for me. It's also a 10 bagger. And here you have another situation which is very interesting, is that today institutions, they basically buy just the big caps. They buy Newmont, they buy American Barrick, and the more adventurous maybe go to Agnico Eagle. As this bull market evolves, these big institutions will want to have a smaller company, but they'll want to have a backing, and they have Agnico, so they'll buy Maple, and they can go to ridiculously high prices. Since I'm speculative in nature, and I believe that we're going to have a massive bull market. It only started 4 years ago. It's starting to warm up. In these time, at the end of a bull market, what goes up the most is, of course, the smaller companies. So today you can buy, I'm giving my $1 million to Southern Empire, because you're basically, the market cap is covered more or less by their cash or working capital. And then they can increase the resource dramatically. It probably could be a mine. Plus, they probably have something like $100 million in in their dumps. So it should be a 10-bagger.
Okay, super. Claude, thank you very much,
Fingers
because
crossed.
otherwise you are killing my time limit here. Luc ten Haaf, to whom from Karumba Research, to whom you want to give your money?
Yeah, thanks everyone for presenting. It's a difficult one because all of them are different, very different, and I like them in different ways. But I choose for Maple because I like Quebec, I like Atico backing. I also think there are some concerns though, but same for the other companies, I have questions left. So I choose Maple based on what we've heard.
Thank you very much. And last but not least, Vincenzo Zinni, to whom you give your million.
Hi, thank you very much, everybody. Very good presentation, very good day. And I was in two minds. I really like Atico and Maple, but obviously they're very different. The reason why I like Atico is because they've been generating cash flows, pretty stable, strong ownership, and I don't really mind the emerging market exposure. And I like Maple on the other side just because resource is pretty outstanding. I'm gonna go for Atico just because I want to de-risk my portfolio. I've got a lot of exposure already in large exploration, and I really like the jurisdiction, to be honest.
Thank you very much. Now we have a small problem, Andrew, because we have 2 votes for Atico, 2 votes for Maple, 1 for Southern Empire. So what we're going to do is Atico and Maple Gold in the final?
I think that would be the right thing to do. I think it's been a very, very close sort of pitch battle today. You know, if I did have sort of a real $1 million, I would be investing in all 4. But I think we'll put Atico and Maple Gold through to the final, Jochen.
Super, I like that. So please make a note for that. Thank you very much. I think you all deserve it, definitely. Thank you very much for really great presentations, great companies, also 2 companies I did not really know that well. And yeah, really happy for that. Also, thank you very much for our judges for taking the time today and asking very good questions. And yeah, we look forward then to see you all in the final on Thursday next week on 2 o'clock London time. Stay healthy until there. And also what I should point out, from 23rd to 25th, there is the Minds and Money running. I'm sure you had already an email or several emails in your inbox. So make sure you are participating. You can get a lot of good meetings, one-on-ones, and meet a lot of good companies. And of course, you meet us again in the final for the pitch battle. And so this is it from my side. Andrew, you want to add something if everything is set?
Yeah, I mean, just once again, a huge thank you to you, Jochen, for being such a great host. Thanks to our 4 contestants, thanks to our 5 investor judges, and most of all, thanks to you, the audience. See you all next week. Have a great evening.
Perfect. Thank you very much. All the best.
Thank you so much.
Thank you.
Thank you, everyone.
Bye.
Good.